Ladies and gentlemen, good day, and welcome to Mallcom India Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Chaiti Gujarati from Valorum Advisors. Thank you, and over to you, ma'am.
Good afternoon, everyone, and a warm welcome to you all. My name is Chaiti Gujarati, Valorum Advisors. We represent the investor relations of Mallcom India Limited. I hope you all are doing very well, and on behalf of the company, I would like to thank all the participating people in the company's earnings conference call for the first quarter of the financial year 2023. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and the information currently available. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. I now would like to introduce you to the management participating in today's earnings conference call and give it over to them for their opening remarks. We have with us Mr. Rohit Mall, General Manager, and Mr. Shyam Sundar Agarwal, Chief Financial Officer. Without any further delay, I would request Mr. Rohit Mall to please give his opening remarks. Thank you, and over to you, sir.
Thank you, Chaiti. Good afternoon, everybody. It is a pleasure to welcome you to our earnings conference call for the first quarter of financial year 2023. Firstly, I hope that everyone is keeping safe and well. In the interest of some of the people who are new to the company, let me first start by giving a brief overview of the company. Mallcom India Limited is a 4-decade-old company and one of the largest manufacturers and distributors of personal protective equipment in India. It provides a one-stop solution for manufacturing one of the widest range of head-to-toe PPE. The company is also one of the largest exporters of PPE from India, exporting to 55 different countries across 6 continents. We have an expansive manufacturing footprint with 13 production facilities spread across India. And over the years, we have focused on backward integration wherever possible, resulting into significant cost savings and gradual margin expansion. Our integrated manufacturing facilities are used to module, assemble, customize, and package the different head, hand, body, and feet protection. Each of our facilities have in-house labs that perform product safety testing and ensure compliance with international quality standards right through the production cycle. Now, I will request Mr. Shyam Agarwal, our CFO, to bring you on the financial performance of the company, after which I will brief you on the operation highlights.
Thank you, Rohit, and good afternoon, everyone. Let me first brief you on the first quarter financial performance of financial 23. On a consolidated basis, in quarter 1 FY23, the operating income for the quarter was about rupees 87 crore, which was an increase of around 42% on a year-on-year basis. Operating EBITDA reported was around rupees 12 crore, which was an increase of about 45% on a year-on-year basis. Operating EBITDA margin stood at 13.62%. Net profit after tax reported was about 7 crore, which was increased by about 30% on year-on-year basis, while PAT margins were reported at 7.89%. Now I would request Rohit Mall to explain the operational highlights.
Thank you. On the operational front for the quarter under review, even though quarter 1 is historically the slowest quarter for the company and the sector, the company has posted very good growth on year-on-year basis. This was primarily due to the slowdown of the effect of COVID-19 pandemic on local and global economic activity. The income growth was on account of both price and volume growth, with strong domestic growth on account of economic revival post-pandemic. Our margins have also improved slightly due to better operational efficiency and reduction in operation costs, which nullified increased cost of raw materials. Additionally, there was some normalcy in shipping costs, which helped importers and exporters to pass on the cost to the consumers and therefore eased pressures on margins. Lastly, the company's credit rating has been upgraded from A- to A, stable, as assigned by ICRA during this quarter. To conclude, trade deals signed with UAE and Australia are also helping get more interest from these markets, and upcoming deals with UK should also improve revenue potential from such countries. Thank you. With this, we can now open the floor to questions and answer sessions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Rahul Jain from Credence Wealth Management. Please go ahead.
Thanks a lot for the opportunity. So, couple of questions, sir. Firstly, Europe is almost
sorry to interrupt, your voice is not clear. Can I request you to speak through the handset?
Okay, just one moment. Is this clear now?
So your voice is still coming muffled.
Okay, just one moment. Hello?
Yes,
Hello?
sir, this is a little better.
Yeah. So a couple of questions. One, Europe being almost about 40-45% of our revenues, given the current situation, and typically some of the other companies also talking about slowdown on the international markets. So how do we see the demand in the current scenario? And going ahead, are there any hiccups or some kind of delays or some kind of pricing pressures on the international front, more so specifically to Europe? Second question, sir, we have just increased, as per the results, we are increasing our stake from about 50% to around 75% in MSPL. So just to understand the reasons behind it, the rationale behind it, and does this mean there is some increase because you're putting in money? Probably this means some increase in capacity because of increased business opportunities which are visible to us. That is second. And the third and the last one, with regards to the capex which has been done in Ahmedabad, as per the results, we have done about 5.8 crores sales from MSPL. So going ahead, how is the Ahmedabad capacity ramping up? In the current quarter, what has been the contribution and what contribution do we expect in FY23 and FY24 from that? Thank you so much.
Okay. I think I can take the first question and then Mr. Agarwal can take the rest too. So with respect to Europe's slowdown, there are definitely talks about it, but as such, there has not been any firm ask from the customers that we need to slow down the production or orders. Yes, some countries are definitely suffering more than the others, and there it's kind of getting difficult. One of the examples is Turkey, where the currency has devaluated extremely and there's high inflation there more than a lot of other countries. So yes, their importers are facing issues, but by and large, it's not immediate that we're seeing the pressure right now. With respect to price pressure, definitely there has been some sanity in the business in terms of shipping and logistics costs, though they are not going back to the previous levels of maybe 1 or 2 years ago, but at least this is the new normal which people have understood. So that's definitely there. And raw material prices have also started to stabilize a little bit earlier. The cotton prices were going through the roof and there was no stopping it. Same with a lot of leather products. But again, there's some sensibility coming to the market. again, and we're hoping for better, better margins, hopefully.
So, okay, talking of this further investments which we plan into MSPL, yes, because as we already informed you all that MSPL, the production started second half last year, and now the things are, the productivity also now getting normalized, and as we have already mentioned in our, decision also that this capex we need, this investment, further investment we need, where the equity goes from 50 to 75%, will be used for further, investment into machineries as well as working capital also. So this is in line with the progress which we could do into MSPL, where now the volumes are picking up, and yes, we need to do some capex also. So additional machineries would be installed, and we are not going to borrow anything there. So it would be from internal, investment and actuals only. And talking of projected turnover, yeah, it would be for this year. We are targeting minimum 24 to 30 crore turnover from this unit, and EBITDA margin remains around 15%. And for next year, it can be in the range of 32 years. So FY24. So this is what we are targeting.
Sure. So, sir, this is over and above the 25 crores which we had planned for Ahmedabad capacity. So, additional what kind of investments do we plan in this facility?
So basically, what is happening, the total investment which we have done in Ahmedabad for capacity is around 18 CR only, and the project cost was 25 CR. So yes, we need to put, invest further for machinery. So it would be part of the investment goes into setting up additional lines, machinery. There would be some new machineries being installed there, and also, for working capital requirement also we need to meet.
Thank you so much, sir. I'll come back in the queue for further questions. Thank you.
Thank you. Participants, you may press star and one to ask a question. Next question is from the line of Dwanil Desai from Total Capital Management. Please go ahead.
Hi, good afternoon, everyone. So my first question is if you can give update on the Ghatakpur, relocation and expansion. I think it was to kind of comment in the first week of July. So has it been completed, and if not, what is the status? Secondly, if you can give capacity utilization number that we are planning for Ahmedabad facility this year. You already gave the revenue numbers, but does it mean that we'll be operating at 45-50% capacity utilization? If you give some sense into that. And thirdly, the question is slightly broader one to Rohit, that we have all the entire product basket with us. We have a very large set of customers, with years of relationships. We are well entrenched in domestic market. So what does it take, or what will it take for us to move from 14-15% growth trajectory to, let's say, more than 20% growth trajectory? Is it the capacity? Is it the demand? What are the factors that is putting a constraint on us, where we are targeting to grow at 15% and not 20% plus? These are the three questions.
Okay. So I can briefly answer all three, and if I've missed something, Agarwal, you can cover up. So for Ahmedabad, yes, by hopefully the end of the year is when we are, targeting to have achieved 40-50% efficiency. Hopefully, we are on track. We are making changes every month. We are hoping to grow there. For Ghatakpur, yes, we have started a couple of lines right now. So phase 1 is already in progress. Hopefully by the end of the calendar year, we'll have one the entire phase 1 ready. But we've started, so this plant is under construction, and also we have started some manufacturing from there already. So this is going as per plan. And for the broader question, the growth constants that you're asking for. So a lot of things. I believe we have earlier also mentioned that, especially if you're talking about the European economy, a lot of these countries, smaller countries, which come under the category of underdeveloped or semi-developed, they have the privilege of 0% duty with them. So, for example, classical places, Bangladesh, a lot of the business goes through Bangladesh because they have duty-free exports to Europe. So, one macro level, we are expecting some policy decisions from the governments of both countries. So, there are talks of EU-India trade deal. So, hopefully that should be a big boost for all the Indian manufacturers. We have seen the starting effects of the trade deals with UAE and Australia, that the interest is rising, and we're also hoping that UK trade deal will finish by Diwali this year, as mentioned. So, macro level, this is something which is happening. Second is the raw material. A lot of products, high-end raw material, has to be imported to India. Again, there's a push to build technical textiles, to build a lot of chemicals here so that we can be self-reliant. So these are some macro issues which are happening. What issues we can control, we are trying to do it. Let's say the labor costs, let's say the efficiencies, and all these items adding to the product basket. So this, from our end, we are doing, and hopefully, in the coming time, from 14-15% in the short term, we can also see the 20% revenue growth that you're looking at.
Okay. So, to summarize, what essentially you are saying, that we are positioning ourselves for a higher growth. If macro things fall in place, then there should not be any internal constraint. That's the right way to look at it, right?
Yeah, that's what you're aiming at, right?
Oh, okay. And a small follow-up on Ghatakpur one. So you said that already we have started manufacturing products from the new phase 1. Is that understanding correct?
Yeah. So we've started a couple of lines only. So it's very it won't be a big output as compared to total capacity, but yes, we have started manufacturing products. Yeah.
Okay. So significant contribution from this will come from Q4 of this year, or maybe next financial year.
Next financial year, yes.
Okay. Okay. Great. That is from my side.
Thank you. Next question is from the line of Ankit Gupta from Bamboo Capital Advisors. Please go ahead.
Yeah, thanks for the opportunity. I just wanted to, delve upon a point that you have mentioned in your presentation about, neighboring countries like Sri Lanka, Pakistan, and Bangladesh facing the economic and stable government issues. We know that, Bangladesh in textile is a big player, and Sri Lanka also is a big player. So on the technical textile side, if you can elaborate how this shift is happening, and are there some initial signs that you are showing some of your existing customers are increasing the wallet share of India compared to these companies, compared to these countries? If you can elaborate on that, Rohit. Yeah.
Sure. So actually, yes, definitely there is a country risk with our neighbors. We all know how Sri Lanka is placed right now. Bangladesh also having some economic trouble, and same thing with Pakistan. So companies which want to mitigate their country risk are definitely looking at India, Indonesia, Vietnam as an option. But definitely India is a big resource pool. So if you want to move big supply chain, then India is a good choice. However, some companies and brands have investment in these countries, where it's more than a customer-supplier relationship. So for them to have additional or move their entire supply is little difficult. They will, even if they have to start, they will start replicating the supply chain with another country and then only move out of the other countries completely. But yes, we are definitely feeling the sense that people are looking at India as an option, and there is increasing interest for these kind of products. But definitely, like I also mentioned earlier, this has to go hand in hand with availability of raw material, which India traditionally wasn't there. Technical textile, we are seeing a push from the government, from the textile ministry as well, for different kinds of products, which does not even mean for safety, even for agri-tech, sports tech, health tech, a lot of these items. So that's what we are hoping at. There's definitely a country risk which people can eliminate from India.
Sure, sure. And one more point, in our earlier call, you guys have elaborated that, domestic, there is a lot of under-penetration of safety products. So, domestic proportion will increase is what you are expecting over the next 2-3 years. But given how things are shaping up on the macro side, with the China plus one thing, as well as shift from countries like Bangladesh, Sri Lanka, and Pakistan to India. Do you think now export can also grow at a higher pace than you were earlier anticipating?
Higher pace than domestic, I still don't think so. That is going to happen. That export is going to grow at higher pace than domestic. Domestic will grow bigger because even if you combine some big importing countries, the population itself is not so big as India. So by sheer number in India and the domestic and the neighboring countries, we have a lot of population to cater, and because it is under penetrated, so this growth will come faster than the export market, and this is more of stock and sell. So it's relatively easier to have growth here than in the international market, where it's more of a long-term gestation period for a long-term partnership, and not easy to change the supply chain. So I don't expect the same growth to happen from domestic as well as export, but definitely the export market is getting more open and more interesting for us.
Sure, sure. And one thing on the accounting side I wanted to understand was, how the accounting for MSPL is done in the consolidated entity. So, we see that the revenue for standalone and consolidated entity is almost the same. However, the expenses on employee side and manufacturing and other operational expenses are higher in the consolidated side. So, if you can elaborate how the accounting is done for MSPL and other subsidiaries, and where is the revenue for MSPL be reflected? Is it that MSPL supplies to the Mallcom standalone and then it sells it? How does this arrangement work? If you can elaborate on that.
No. So consolidation we are doing whatever this subsidiary company turnover would not be there. It is not there, and basically, what is happening? You see the similar turnover because Mallcom is also selling to subsidiary. Little bit of turnover is there, and this is nullifying the turnover of the subsidiary companies. So that's why the turnover remains same.
Sure. Okay. And the cost of subsidiaries are the cost, like employee cost, and that are getting affected.
But yes, the turnover and everything included, only because of you see the similar turnover because the Mallcom is also selling to subsidiary company. Little bit of raw material.
Sure, sure. So also one thing I wanted to understand was that earlier we had almost 51-49 kind of partnership in MSPL. But now with this fund infusion of 8 crore in the subsidiary, our holding in the MSPL is going to 75%. So is it that our holding will now remain around 75% and our partners will be around 25%, or they will also infuse some more funds in the subsidiary in MSPL to increase their shareholding?
No, it remains at 75-25 as of now.
Sure. Okay. Thank you, and wish you all the best. Yeah.
Thank you. Next question is from the line of Sumesh from Green Portfolio. Please go ahead.
Hi, sir. My first question is on the China Plus One thing. So in the investor presentation, you have stated that we are seeing the early effects of China Plus One. So does it mean there is any change in our yearly guidance for financial year 23? And since 4-5 months have already passed, what is your outlook for financial year 23 as on date?
I don't think the projections are changing for this current financial year. I think a little bit of, even if you saw our previous calls, a little bit of that was accounted to China Plus One policy coming into play. So whatever the projections were given were taken into account, all of these things. So I don't particularly see any change in the revenue guidance.
Okay. And sir, continuing the question of previous gentleman, so who owns this balance 25% in MSPL, and why aren't they infusing the money? Why only Mallcom is participating in the round?
You see, basically, we in the past also we have explained that we have MOU with one of our these people are basically into marketing and arranging customers, so that's why. And in the past we have many times we have already explained this.
No, can we know the name of the partner? Is it possible?
It is AB Holdings PLC, I think.
Okay, AB Holdings.
Yeah.
Okay, sir. And sir, my last question is on the Ghatakpur plant. So last time, I think in your investor presentation, it was stated like it was supposed to start from July 1st week. But while replying to someone's question quite a few minutes ago, you stated that the completion will be in around the end of the calendar year. So what was the reason of this delay?
No, there was no delay. The plan was always that the first phase will start from July 1st week, and then we'll go phase by phase. So we've also mentioned in the past that overall the project will take 2 to 3 years for complete, because it's a big land, and we are going phase by phase because we are planning to migrate a lot of manufacturing and also build capacity. And it'll not be just one product line. There'll be different product categories. So this is only phase 1, which we are saying that we have started, and hopefully we'll be completing by end of calendar year, and then we move on to phase 2. So this was the plan always.
Okay, sir. That's it from my side. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Akshay Kothari from Envision Capital. Please go ahead.
Yeah, thanks for the opportunity. So just wanted to know a couple of things. Who would be our customers? EPC players, or who would be our customers in general?
So if we do business in 2 main formats. One is in our own brand name, which is mostly concentrated in the Indian subcontinent, Middle East, Africa, let's say these areas, and the rest of the world. We are white label manufacturers. And in these, the second category, it's the importers or distributors or brand owners who are our customers. And for our branded sales, we sell through a network of dealer and distributor, and the end users are any of the factories and the SMEs who have people who require any kind of protection in the work floor.
Okay. Okay. And so, sir, considering that India has a lot of wallet share in the EPC segment like L&T, Power Mech, there are various other companies who are, doing World Bank funded or ADB funded projects. So they would also be requiring all the safety gear equipment. So do we have any direct supply arrangement with them, or how does it go that way?
No, so we always sell through our dealer distributor network, and we are not selling it to any client directly because so there may be a lot of funding in these projects, but if you look at their P&L statement, PPE is not a big part of their cost. This comes under probably the MRO, line item in your PL, and it's got very. If you see the overall project cost, this cost is insignificant.
Yeah, but this EPC players must be also procuring it from somewhere, right? Or it's not that they're part of their requisition list, all these EPC players?
I am not sure if they are directly procuring it, but to deal with us, we have in India, we have close to 70, 75 dealers. So if we get a lead or our dealers get a lead, the item is sold through the dealer only.
Okay. Okay. And so what would be our domestic revenue? You've given the Asian subcontinent, but from the domestic front?
Most of the Asian subcontinent would be India. So almost, till last year, I think it was 1/3 coming out of domestic.
Okay. And so, do we have any threat from the Chinese competitors in this field?
Yes, we do. A lot of people import directly from China, and some items we are completely uncompetitive from China till now because of cost, and those are still being imported in the country.
And so lastly, I think you have some new products, rainwear and sports safety equipment. So could you elaborate on that? What is your strategy going forward in these?
No, it's the same. So let's say every season, every year, we are coming out with something new. It's either an enhancement of an already launched product, or it's a completely new product category altogether that we are thinking of. So different product categories, and in fact different items in those categories have different ways of how we're planning to market it. For example, you mentioned sports safety, so that is more of a strategic selling rather than just getting the cheapest product and giving it to the worker. So that those kind of products are not meant for somebody working in iron and steel, or even any cement industry or these kind of industries. They are meant for more in the Horeca segment, or some places in the automobile industry. So that's a complete different marketing call as respect to your normal leather safety shoe. So each has its own way of own channel and own way of marketing. That's how we are looking at it.
Okay. Yes, sir, that's it. And sir, can you give? I think I missed it. Can you give the FY23 guidance again?
Yeah, for the total, or you are talking of product wise?
Financial year. Yeah.
Financial year 23, we project we should have a growth of top line growth of around 10 to 12% minimum, and the EBITDA margin should be maintained. So last year we had around 360, so next year we are targeting around 410 crores in.
Okay. Thanks a lot and all the best.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Chintan M, an individual investor. Please go ahead. Chintan, sorry to interrupt you. Can I request you to come in a better reception area, please? Your voice is breaking. Chintan, sorry to interrupt you, but still your voice is breaking. May I request you to rejoin the queue and call back, please? Thank you. Participants, you may press star and one to ask a question. A reminder to all the participants, you may press star and one to ask a question. A reminder to all the participants, you may press star and one to ask a question. Next question is from the line of Parth, individual investor. Please go ahead.
So firstly, congratulations on a great set of numbers. Can you talk about what is the current utilization average across all plants?
Yeah. So basically, see, Mallcom, yes, we are mostly like in case of, hand gloves and safety shoes, it is almost at in the range of 90%. But definitely we have some scope of improvement on garments. So this quarter we had a little bit on the lower side turnover because of some rainy season. But yes, it is around, I would say, this first quarter it was around 70% in garments. So there we can improve. And then, so these are nitrile gloves also, we had around 80% operational efficiency. So there also we can improve. These are the 4 product categories.
Can the year-on-year growth momentum continue in coming quarters and for this particular financial year?
Yes, definitely. So we should be as per our projections. Yes, we should be performing. Yes, we are.
Okay, that's it. Thank you so much, sir. Congratulations once again.
Thank you. The next question is from the line of Sumesh from Green Portfolio. Please go ahead.
Yeah. So, sir, Ahmedabad location, which was started last year, I guess Q4. So, what was the revenue contribution from that location in Q1? And what kind of margin are we going from there?
See, basically, we have the projection of around, if we minimum 25 to 30 crore turnover we can do, but the margins are also, more or less, EBITDA margins would be in the range of 15 to 20%, but definitely we need to increase the efficiency. So the project has just started. And what we see that in our type of product, these are not normal garmenting. It is industrial garmenting. So there we see that, people are being trained and skilled and slowly, but definitely the operational efficiency is improving. So yes, we had some losses because of depreciation loss also and some operating loss also in the first quarter. But the margins are same, so we need to increase the efficiency, and we see that the profit should be coming from there very soon.
No, sir, I'm not asking about the profit. I was asking about actually the revenue part. Like, so 25 crores means quarterly 6 crore run rate. So right now, how much did we clock in Q1?
Yes, Q1. It was around, I think, 1.5 CR. Yeah.
1.5 CR.
Yes.
Okay. And sir, I was going through the investor presentation, and there was a mention about Australia and UAE deals but you said that our guidance will remain intact, similar to the last call. So aren't we seeing any inquiries from UAE or Australia location Or if yes, then what is the quantum of the orders that we received from those locations?
So like I mentioned, so when we gave our, when we are giving our projections also, we have taken into account that, these FTAs will be signed. Now, a thing with two countries agreeing on a policy, it's not like things start shaping immediately. So even after the announcement, it takes about 3-4 months for it to be gazetted and actually come on the platform, which is executionable. So that delay is happening, and also, like I mentioned, Australia especially is a market which falls under our white labeling. So white labeling is something that, as mentioned earlier, has a longer gestation period to start a new relation as compared to stock and sell. UAE, we are definitely seeing better growth there as compared to last year.
So okay, so UAE we already started exporting, you're saying?
Yes, we were exporting earlier also, but because there we are doing under our brand name, so it's easier, faster to increase growth there than to our private label markets.
So what was, if quantum per se, if I ask, like what was the earlier contribution, and after the trade deal, what is the current contribution from UAE in number terms? Just it can be round figure also.
The trade deal has just been signed, and only, I think a month or not even a month ago it was gazetted and put in the platform. So there's barely anything that we are seeing right now, but we're expecting to have a lot more growth from UAE as compared to last year.
So can we expect like financial year 24 might have a higher growth rate because of these deals? Because 10-12% is not that high also. I mean, the guidance that we have given. So
depends on the industry. Some industry 10-12% is very high growth rate. Some industry 10-12% isn't high. So yes, but we'll definitely be cautious of quoting more. We only want to see first year, because this is only the first year that the FTAs are being signed. So we don't want to overshoot our expectations. And if we see that yes, a lot of that has resulted into revenue, then definitely 24 we can expect that to continue. Similar example is China Plus One. We've been talking about. Everybody's been talking about it for last 2 years. It's only now that we see some movement happening.
Okay. Thank you, sir. Thanks a lot.
Sure.
Thank you. Next question is from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. Sir, how much is the total capex plan at Ghatakpur?
Yeah, so it is in first phase it is 25 CR. So what we have done till now is, as Rohit mentioned earlier, that the first phase of building is ready, and we have started putting up lines there. So 5 CR additional is 20 CR we have invested in building and the land development and building, and 5 CR we plan to invest into machineries also, new machineries which is in process. And so some of the machineries are already installed, lines are there, so we have started production also there, but only at very small volume. So over the period, by end of the this calendar year, most of the machineries should be installed and normal production should be there.
And sir, what would be the revenue potential from this capex at full utilization?
Yes, see, basically, our target would be almost 100 crore we are doing in garmenting, so additional 50 CR would be coming from this unit. So 150 crore is for garments we target from our Kolkata operations here, from this unit only.
Okay. And sir, for FY22, can you provide the industry-wise contribution of revenue? Which are the top contributors?
of
Uh,
industry-wise.
Yes, sir, industry-wise, like construction, industrials or oil and gas, like which will be the top revenue contributing industry?
It would be very difficult, what we can say that, the entire manufacturing industry, everybody is using PP and it goes through dealers. So, the market is like that, everybody. So, maybe, oil and gas is something where it is, maybe the demand is more, but it would be difficult. I can give you whatever turnover we are having.
So,
Okay.
in a very layman's kind of a thing, what you can assume is usually the top 10, 12 countries, industries which contribute to the economy, except the services part, where there's,
Oh,
where the more contribution is coming from, those are the big industries that, we also get the revenues from.
okay, sir. Thank you very much. That's it from my side.
Thank you. Next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. Rohit, the 10-12% growth that you're talking about, is that including the MSPL Ahmedabad unit growth as well, or that will be in addition to 10-12% growth that you are targeting on standalone basis?
No, I think it is the overall, as of right now, what we are seeing in the market, that's how we are, seeing it, because there's definitely addition of things, but there's also the talks about recession happening, which was earlier also pointed out. So,
Sure.
And a lot of markets, like I said, Turkey and some markets which are completely evaporating from any sort of, importing. So we are taking that also into account. So it's kind of a push and pull, which is happening. So 10-12% is keeping in mind everything.
Sure. Okay. Thanks.
Thank you. Next question is from the line of Akshay Kothari from Envision Capital. Please go ahead.
Thanks for the opportunity once again. So just wanted to understand what would be the useful life of various equipments, gloves, shoes, on an average. I know it must be difficult, but just on an average.
Yeah, it is around 3 years.
Sorry?
Actually, it'll be difficult to give an average because, see, shoe is 12 months. A glove can be 1 day. A glove also can be 1 to 3 months. Helmet is 5 years or the first time it develops a crack. Masks are usually supposed to be worn for 8-hour duration and then changed. But yeah, even people wear it for longer. So 1 day. Workwear, yes, can go on for longer period. Usually it's number of wash cycles. So it's actually, it'll be very wrong to do an average.
Okay. And so you have mentioned that 90% of the customers are repeat customers. So is it very much likely that over the year around 90% of our revenues would be from the same customers only, and 10% what would be the incremental customers addition, if you can give a sense of that?
I wouldn't say 90% are repeat. A lot of them, yes. Again, it depends on which kind of business you're talking about. Definitely for the white label clients, I wouldn't say 90%, yes, but something like 80%, 75-80% should be repeat, and the rest would be incremental.
Okay, and just a generic question. How different would be our shoes from the ones which are used in the defense procurement, in the defense, basically army, navy, and all those things? How different would be our shoes?
So even for the defense, they wear different kinds of shoes. So for example, somebody at Siachen is wearing completely different shoe than somebody who's in a normal terrain like your CRPF or something like that. So it depends on the terrain with respect to army. also it depends now whether it's in defense is the army or the air force or the naval.
Yeah, got it. So just trying to explore whether we have an opportunity over there or we are not eyeing that area.
We are eyeing. We till now don't have the let's say the right kind of product for army, but that's definitely an area we are exploring, and we are regularly participating in tenders and talking to ordnance offices to see what can be done. But right now, if you say are we a big player there, no, we are not.
Okay, okay. That's it from us. Thanks.
Thank you. The next question is from Vanil Desai from Turtle Capital Management. Please go ahead.
Two questions. So one is, I think you just hinted that the raw material prices have come down off lately, and I think we saw very decent margins despite RM cost being high. So do we see some room for margin improvement if the RM prices remain soft? That is one. And with all the capex in place, considering Khatakpur 1 and the Ahmedabad phase 1, can we do 500 crore revenue from the available facility?
To your questions, first your question, so a little correction. I didn't say that RM prices are coming down. It's definitely stabilizing. So market is getting okay with the new RM prices. We don't see it to be going down as of right now. It might in the future, but not right now. But definitely, if the RM prices go down, and we should see some margin improvement, because even the logistics prices, like I was mentioning earlier, they have stabilized, and we are able to pass it on, which was kind of a pressure earlier. So yeah, so that is the answer. And with the existing, yes, with whatever work in progress units we have, there's possibility of seeing, including those, there's possibility of seeing 500 crores revenue.
Okay, great. Thanks. All the best.
Thank you very much. As there are no further questions, I'll now hand the conference over to the management for closing comments.
Sure. So thank you all for participating in this earnings con call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relations managers at Valorum Advisors. Thank you. Stay safe and stay healthy.
Thank you very much. On behalf of Mallcom India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.